tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Looks like we have everything in order. I'll set this thing's all weird. There. Let's see. All right. No, you didn't, Howard. No, you didn't. All right. Hello, Dave. Max, what's up? Okay, let's go through the simple stuff. Well, we'll talk about the Grayscale dump because they don't know how to launch a product. It's very clear now. They didn't just S the bed with their Bitcoin spot product. They S the bed with their Ethereum spot product. And you'd think, well, why would they do it twice? I mean, the first one was so bad, they fired the CEO. Are they going to fire the other CEO? Who knows? But anyway, Grayscale is still hemorrhaging Ethereum because people don't want to be a part of that stupid ass fund because it's incredibly expensive. So we'll talk about that. BlackRock says, no thanks to a Solana ETF. They basically say it's not that interesting for a variety of reasons. We'll talk about that. And one of them being just technically not sound. Like, of course, the shit shuts down every 3 days. Like, why would BlackRock get behind that? And all the 6 people that care, the meme coin traders, are like, oh no. And everybody else. I mean, this Solana was always pushed by VCs and FTX. Keep that in mind. There is no Solana, not in any meaningful way, without FTX. And FTX is known for some other things that were amazing, like pulling the most amazing scam and theft and thievery. So, big surprise. No Solana ETF. Wah, wah, wah. Of course, they'd probably say something similar about, Cardano and definitely Polkadot. There's a Polkadot ETF. That's never happening. Anyway. And the Grayscale dump is not a complete wash. It's not that people are exiting that and all going back into other ETFs. It's people that have been locked up in that thing are exiting, just period. They're just exiting, period. So we'll get into the stats of that. Let's see. Also, please discuss. No, I don't care about the drop in GBTC. It makes no difference. It's a weird Bitcoin trust. And Sam, all right, let me describe this again. Do you guys understand how a trust works? It's not an ETF. So all there are on that, Sam, is just people with shares. They're selling shares. So it's kind of correlated to the price of Bitcoin, but it's not pegged. So if a bunch of people sell, That's why it can trade at a deep discount or a huge premium. Does that make sense? So the way GBTC worked is Bitcoin went in one end and shares came out the other. There's no reverse of that. It's like an omelet machine. Eggs go in, omelet comes out. You can't make an egg out of an omelet. Or as my friend used to say, you can't make chicken salad out of chicken shit. At least you shouldn't. That is not a salad any of you want to eat. All right. Let's see. Okay. You migrated the last of your AGIX and your portfolio dropped. Well, I mean, the rate is the rate. Otherwise, you can just sell it. You could kind of sell it and then swap and do the purchases yourself. But yeah, it is what it is. Okay. So let's get into the grayscale news because that's going to probably, make more sense. As far as like what's going on with Ethereum, the price of Ethereum, I mean, it's dropping because there are technically more sellers than buyers. But those sellers are getting their marching orders off of kind of perverted information. So anyway, let us delve into that a little bit. Grayscale Ethereum ETF outflows expected to ease soon. Analyst. Senior analyst Mads Eberhardt believes that the outflow of ETH, and that's the Grayscale fund, will ease this week, which could give Ethereum quite a price boost. So Grayscale's recently converted Ether ETF. The Grayscale Ethereum Trust, ETH, has experienced incredibly large outflows since July 24th. Analysts believe these outflows could stabilize by the end of the week. In turn, this could potentially boost ETH prices. Despite the recent outflows, BlackRock's CIO Samara Cohen and other analysts are quite optimistic about the long-term role of crypto ETFs in diversified portfolios. The mainstream adoption of crypto is also expected to increase as regulatory clarity and real-world asset tokenization drive market growth. Like this is some new thing. Token assetization. I mean, this is amazing. Get off the gas, man. To RWA, real world assets. Whoa. This is fancy. Isn't that the same thing as like 7 years ago? Yes. Is it any different? No. It's just a new name. Yes. Why? Marketing. Great. People like new stuff. The Grayscale Ethereum ETF outflows are expected to stabilize. Massive outflows from Grayscale's recently converted and poorly put together exchange-traded fund, Ether exchange-traded fund, ETF. The Grayscale Ethereum Trust, ETH, so it's ETHE if you're curious, are expected to subside by the end of this week. This could potentially cause an upward shift in the price of Ethereum, according to Steno Research senior analyst Mads Eberhardt. The Ethereum ETF net outflow is yet to subside, but it's likely that it will happen this week. When it does, it's only up from there. And it's pretty funny because if you look at all of the ETFs, they're mostly absorbing capital, right? Bitcoin ETFs gained 1.05 billion in 3 sessions, while Ethereum lost 341 million. Think about that. The ETFs added 1 billion in inflows, and Ethereum's down. Does that sound like people might be making decisions on perverse information, or maybe only seeing part of it? Listen, if there weren't so many dummies, Brandon and I say this all the time, if there weren't so many dummies, there wouldn't be any money for us to make. If everybody got it, no money left. So in a July 30th post, Eberhardt shared that he's quite confident that outflows from Grayscale, because they're the ones experiencing the outflows, Grayscale, ETH, which have persisted for days, will soon start to abate. Since its conversion to an ETF on July 24th, ETH, Grayscale, experienced outflows of more than 1.7 billion. accounting for 18% of its initial 9 billion in assets. This prevented Ethereum ETFs from achieving net inflows, despite consistently positive inflows from the other 8 ETFs. Fuck you, Grayscale, you dumbasses. These guys are so damn stupid. I'm sure that there's 6 of them somewhere in an office like, ha 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 ha, we'll show them. We'll destroy our whole company, but the 6 of us will be rich. Yeah, okay. But you've destroyed. Grayscale has the worst name in the ETF game now. They used to be a big deal. When Grayscale did something, it was like, oh, Grayscale. Now it's like, oh, that's that embarrassment, that group of morons. These guys are dumb. Among these, BlackRock's iShares Ethereum Trust, ETH-A, has received the largest cumulative inflows of 500 million, followed by the Bitwise Ethereum ETF, which is ETHW, with 276 million, and Fidelity Ethereum Fund, which is FETH, FETH. Sounds like you're a Spanish king with a lisp. FETH has 244 million in inflows. So 244 million for Fidelity, 276 million for Bitwise, 500 million, and these are all inflows for BlackRock. Oh yeah, 1.7 billion in outflows, in exits from Grayscale's poorly constructed dumpster fire shit show. Thanks, Shiza. Despite Grayscale's large and continuous outflows, Eberhardt's optimistic and drew parallels to the Grayscale Bitcoin ETF, which also saw outflows decreasing after the 11th trading session. He also believes the peak outflow of the Grayscale ETF will happen this week, which will then lead to a potential price increase for Ethereum once this has passed. And then he has kind of a little cool graph of the two ETFs side by side. Let me see if I can find that graph. It's kind of cool. Kind of a cool little nugget. And this is just basically showing, can you guys see that? Can you see that little nugget? Yes. Here, let me move it up. Bottomed on the 12th trading day. Bottom occurred at 21.5% of the peak. Bottom occurred at cumulative Grayscale outflows of 13.2%. Proceeded to rip 92% in 5 days. Sorry, 50 days. 5 days. That's outrageous. 50 days. So basically, in a month and a half, the price of Bitcoin almost doubled. So what do you think might occur in a less liquid asset where a third of it is already locked up? Well, gosh, take what's locked up in staking, right? Proof of work. Take what's locked up in the ETFs, and you have an incredibly illiquid of the liquid assets. Less liquid. Let's call it less liquid. Anyway, another trader compared this with the spot, as I say, an pseudonymous trader. No one knows what these dudes are. But anyway, he compared it to the launch of the spot Bitcoin ETFs. He compared that to Ethereum ETFs. The trader pointed out that Bitcoin ETF inflows bottomed on the 7th trading day. Bitcoin then surged close to 92% over the next nearly 2 months. In contrast, Grayscale's Ether ETF reached 17.3% outflows in just 4 days, with a less severe impact on ETH's price. So Ethereum didn't go down all that much due to this. It's gone down a little bit. It's gone down about 10%, but it didn't go down. It's not $2,000. So anyway, Ethereum sees the 4th days of outflows caused by Grayscale. Yesterday, the 9 US spot Ethereum ETF saw a total of 98.2 million in outflows. Just so remember, the total outflows in all the ETFs, 98 million. The Grayscale outflows, 210 million. So the net inflows, I mean, the inflows were actually, if you get rid of Grayscale, 112 million. But then when you factor in Grayscale, it's negative 98 for the day because, again, Grayscale is a piece of garbage. And the dudes there are, I don't know. I don't want to call them stupid, but like if you do the same thing over and over and look for different results, you're kind of stupid. Anyway, and then there's also a Cool, fancy little chart right here. We love ourselves some charts. Anyway, BlackRock's ETH led the inflows with 58.17 million. Fidelity's FETH 24.82 million, and VanEck's ETH-V, that's kind of cool, ETH-V, 10.91 million. Bitwise with 10.45 million. The Grayscale Ethereum Mini Trust saw just shy of 5 million in net inflows, while Franklin's EZET logged 2.52 with two other tiny little nonsensical ETFs with no inflows. 21 shares, Zip, Invesco, pretty much Zip. Total daily trading volume for the spot ETFs amounted to 773 million, down from 933 on Friday, 955 on Thursday. So yeah, it's coming after a weekend with all the Trump stuff. And now that, Bitcoin's given up a little bit of that stuff, a little bit of the ghost. Anyway, now apparently Bitcoin will be tied to the price of Trump's likelihood for presidency. So if good numbers come in, Bitcoin up. Numbers go down, Bitcoin down. It's madness. Madness, I say. The 11 spot Bitcoin ETFs in the US saw 124 million in net inflows on Monday. Crypto ETFs to join model portfolios sometime in 2024. So digital currency backed ETFs are expected to be incorporated into model portfolios by the end of 2024, according to BlackRock's Samara Cohen, their chief investment officer for ETF and index investments. In a July 29th interview with Bloomberg, Cohen talked about the ongoing risks, analytics, and due diligence being conducted by major wirehouses like Morgan Stanley, Wells Fargo, and UBS regarding crypto ETFs. According to Cohen, these firms are examining the roles of Bitcoin and Ether in their portfolios. Well, we know who's not. Vanguard. Vanguard is like, no crypto, regardless of what our clients want. You don't like this, you can go somewhere else. But if I go somewhere else, do I take a huge tax hit? Yeah, so F you, your money is stuck. Oh, man. Isn't it weird? These guys will claw onto this old, tired-ass legacy system until their last damn breath. Weird. Cohen believes crypto ETF allocations to model portfolios will increase by the end of this year and into next year. That's kind of obvious. Model portfolios offered by large brokerage firms aim to balance risk and return through diversified investment strategies. BlackRock projects that model portfolio management will grow from its current 4.2 trillion to 10 trillion in the next 5 years. Yeah, probably led by AI. This growth reflects how fiduciary advisors are increasingly conducting business and becoming aware of cryptographically backed assets. Cohen added that Bitcoin and Ether serve as a valuable portfolio diversifier because of their distinct asset class and use cases. How brave of you. How brave, Cohen. Despite the recent net outflows from spot Ethereum ETFs, Cohen's still confident that the strong launch and the role as access points for investors looking for ETH exposure will continue to grow. Despite the Grayscale Ethereum Trust losing 1.7 billion, about 10% of that has moved into the zero fee Ethereum mini trust. So 170 million into the mini trust. That's cool. But it means on the aggregate, people want out. They want to get away from Grayscale, period. Cohen also mentioned it's unlikely to be a spot ETF for altcoins like Solana in the near future. They said that there's a long list of crypto ETFs that would probably be on the back burner for quite some time. Okay, let's talk about BlackRock specifically saying, no, bro, no. Due to technical issues and whatnots. BlackRock rejects a Solana ETF, citing low demand and numerous technical issues. BlackRock's decision. BlackRock, a major issuer of Bitcoin and Ethereum ETFs, has definitively ruled out. Listen, they're not mincing words, man. They have definitively ruled out launching a Solana ETF in the near future. Despite Solana's rapid growth, BlackRock cites low demand and continual and persistent technical concerns as a reason for their decision. Investability criteria. Samara Cohen, BlackRock's CIO of ETF and index investments, emphasized that they evaluate investability and client demand. While BTC and ETH, Bitcoin and Ethereum, meet their criteria, Solana falls short due to a variety of factors like track record and liquidity, management structure, and reporting. Basically, everything you can do to measure an asset, they fail on every single one of them. What a pile of crap. Anyway, BlackRock, the world's leading issuer of spot Bitcoin and Ethereum exchange-traded funds, has definitively ruled out the possibility of launching a Solana ETF in the near future. The decision comes as the Solana blockchain experiences rapid growth due to meme coins. I added that meme coin part. While BlackRock remains uninterested, other asset managers, including VanEck, have submitted applications to the U.S. Securities and Exchange Commission for Solana ETF, although those applications failed to provide all of the necessary documentation, and it could be speculated that they have no intention of doing anything more than appeasing the public. Ain't that something? Samara Cohen, BlackRock's Chief Investment Officer, CIO for ETF and index investments, addressed the matter during an interview on Bloomberg. She emphasized that BlackRock evaluates investability and client demand while considering new ETF products. According to Cohen, not in the near term, we really look at the investability to see what meets the criteria, meets the bar to be delivered in an ETF. For us, both between investability considerations and also what we hear from our clients, Bitcoin and Ethereum definitely meet the bar. I think it will be a while before we see anything else that we would consider. Robert Mitchnick. I like this guy. He's halfway there. BlackRock's head of digital assets echoed this sentiment at the Bitcoin conference 2024. He cited several reasons why a Solana ETF remains elusive, including the blockchain's track record, poor liquidity, and market capitalization. I don't think we're going to see a long list of crypto ETFs. If you think Bitcoin today, this is a quote. If you think of Bitcoin today, it represents about 55% of the market cap. Ethereum is at 18%. The next plausible investable asset is like 3%. It's just not close to being at the threshold or track record of maturity, liquidity, technical capability, etc. Let's see. Nate Girassi, the president of the ETF store, I'm sure they're doing great, disagreed with BlackRock. He pointed out that exchange-traded products for other digital assets are already traded in Europe. However, he acknowledged that regulatory changes would be necessary for a similar product to emerge in the U.S. Despite the rejection, Solana has been on a bullish trajectory until recently. I don't know. I mean, if Solana is the protocol for meme coins, and no one that trades meme coins cares that it's broken most of the time. No one cares that the developer stole 12 million Solana from the public and then lied about it, then got caught, then said they were going to burn the tokens, then burnt 3 million of them and pocketed the rest. No one gives a shit. They just don't care. Meme coin traders do not care. That's like gamblers worried about the environmental impact of the paper that their gambling tickets are on. They don't care, man. They're just gamblers. So, yeah, we'll see. I'm not against any of these ETFs. They're kind of, they're good in the beginning. They create weird scenarios. Like if you go deep into what ETFs do, it's not all positive. They financialize assets. And when you financialize an asset, you then have twice the asset. You have the real asset, and then you have a paper version of it, a digital version of it. And the problem with that is people quit trading the real one and they just trade the digital one because it's easier. And then the real one tends to dislocate price-wise from the fake one. And then you have a scenario like you have with gold, where there are more than 500 synthetic or derivative or paper ounces of gold for every 1 ounce of gold. And that's weird. And then gold is no longer important because it's all paper. People are just like, well, why don't we let's just go all the way to paper. We don't need the actual gold. So you can get weird situations. I did not watch God Bless Bitcoin. I haven't watched it yet. I'm sure I just worry. Those kinds of things are typically like 45 minutes of Michael Saylor prognosticating while his eyes gloss over and he salivates. I'm like, ugh. Let's see. I have, oh yeah, okay. Donna, you have 100 ETH. They gave the holders 100 ETH. Let's see, 2.5% fee. We get it back. It's hard to explain. It has doubled my return. No, they didn't double your money. My guess is when you exit, they didn't, Grayscale didn't just decide to go out and buy Ethereum and give it to everyone. There wasn't a, if you own this, we're going to give you extra thing. You may be reading that wrong. It may be one for the other type of a swappy thing. Now the price going up may have doubled your return, but Grayscale's plan wasn't to double everyone's Ethereum because they didn't do that. All right. Let's see. ETFs also cause, yes, ETFs do cause centralization. And they cause centralization in a weird way too, because at least at this point, you have a bunch of Ethereum that cannot be used for staking, which cannot provide network security. Staking is important. If you have proof of work, then miners are important. If you have proof of stake, then stake pools and stake pool operators and the staked assets are important. That's how they derive consensus. That's how they propagate transactions. So yeah, man. All right. Would an ETH, Castle, I'm not sure what your question is. Would an ADA into ETH? I'm lost on that one. Anyway, today, our discussion, we're going to switch gears. Let's look at the market for a few seconds. Let's see. Let's take a quick look. We're not going to dwell on it too much because we're going to talk about delayed gratification today. I had a little banner that said delayed gratification, but oh crap. I guess I didn't save it. You know what? I'm going to write it because it's fun to write that. Delayed. That's a form of delayed gratification. Slowly typing delayed gratification. And then putting an I. Seems like there should be an I there. Yep. What are you going to do, right? No spell check. Spell check's a form of AI. I think it's funny that no one in Hollywood's pissed off that their writing software uses spell check, grammar check, continuity check. They're okay with that. They're okay with that kind of AI. But the next step of it just writing, they're like, oh, no, this is bullcrap. It'll take my job. Bitch, you already can't write anything that's legible. You have no grammar skills. Like, stop it. Anyway, you know what? It's another argument for another day. Okay, so what's going on? The Bitcoin 66. Is it down? I mean, it's down from yesterday. It was almost 70K yesterday at the same time when we were talking. So it got kicked right in the newts. So we'll see where it goes. I mean, it's we got the MT-GOX tokens that has to be settled. And considering that all those tokens are hitting the market, I think we're doing pretty good. The tokens that came from the US government or whatever that everybody was scared about, they transferred it. They're going to sell it. That has nothing to do with that. Those are different custody scenarios because the US government is not fit to custody, billions of dollars worth of assets. So that's what that is. It's not a dump. They're not, it's not like Biden in his final throes was like, sell all the Bitcoin. Because Trump talked trash and called me and changed my bedpan. Like what? Anyway. Okay. So the Bitcoin 66.3, Ethereum still 3,300. It's still on a gain for the day, even after all these outflows, even after the complete essing of the bed, the shizaing of the every bed. It's like this is what happened. Grayscale went to the mattress warehouse. They weren't content shitting one bed. No. They needed to do shiza on a massive scale. They needed to find the biggest mattress warehouse in the world, and they crapped every single mattress. All of them. That's what Grayscale has done. And Ethereum is still up. Weird. That means that there's clearly a lot of buyers on the more retail side. So that's actually good. You wonder when this hemorrhaging stops, which is, here the next day or two, probably. We're talking a few days. If we see a $3,800 or $4,000 Ethereum, toot a sweet. I think we could. We'll see though. We'll see. And remember, if Bitcoin is any tell, the 50 days after the worst hemorrhaging in the Bitcoin Grayscale dumpster fire, you had a 92% increase in the price of Bitcoin. So, I mean, that'd give us what? $6,100, $6,200 Ethereum, maybe more. No, it'd be more than that, like 6,400. So could you see some dramatic move in Ethereum over the next 2 months? I believe you could, sir. You could, governor. All right. XRP's up. No one knows why. Hey, you hush. Hush now. So great. XRP, you're going to take over the world. Yeah, okay. Just worry about the thieves that work for your company first. Oh, crap. Got it. It's up because, well, no one knows exactly. Fire Gary Gensler. Okay, cool. Won't make the lawsuit go away. But fire him. All right. I mean, I agree. Fire Gary Gensler. He'll probably walk. Listen, Gensler's not going to let himself be fired. He's going to resign. He's like, you can't fire me. I quit. I'm gonna go be Janet Yellen's private secretary or something. I don't know. She's gone too. Janet Yellen is weird. She's the most intelligent legacy kind of scholar, but she is a damn fool when it comes to technology. She's just foolish. And she also, let's face it, anybody with dentures, anybody that learned economics in the 60s, they don't know fucking shit about the way the world works. They just do not. I don't want to be ageist because age is more of a mindset. But that kind of weird, what do you call them? Economist kind of aristocracy, where they're these they're very arrogant, schooled, but technically stupid economists. These people are fucking dumb. They do not get it. They make really, really dumb statements, and they convert bullshit into math. It's very weird. Like, the Phillips curve is the best one. Anybody here that gets some time, go look up a Phillips curve and look at the dot distribution on a Phillips curve. There's dots all over this graph. And they draw a curve, and then they ascribe that to, and that's the relationship between unemployment or employment and inflation. And there is nothing. There's no curve there at all. It's like you're looking at the screen right now. Draw me a curve. What? There's kind of like, if you look at the red, it's kind of like goes down and then to the right and then back to the left a little bit, and there's no curve there. That doesn't make any sense. Like you would say, you can't draw a curve here. It's a bunch of disparate information. Yes, that's the Phillips curve. It's just a bunch of dots, and they drew a curve in it, and then they stick to that as a model for monetary, for their tools in their monetary tool shed, for their monetary policy, which is print fake money through QE. Again, fake money, not real, fake money, asset purchases with fake money, or moving the short-term interest rates, which no matter how far back you go, has zero impact on the economy and shows that these economists, they don't even understand like really basic economics. Like really, they would all be better off. And this would appeal to them because it was written in like 1974, but economics in one lesson. Who here has listened to that? Who here has listened to economics in one lesson? Henry Hazlitt. It is so good. I mean, it's a little dry. I'm not going to lie to you. It's a bit dry. You'll be parched when you're done listening. 7 hours. You can look it up. It's on YouTube. It's called Economics in One Lesson by Henry Hazlitt. It's like 7 hours. Just listen to it. It is so good. It is so basic. It's so game theory based. No, don't put it on your list. It should be the list. How good was it? I mean, again, it's stale, but wasn't it good? Isn't it good? It is good. Everyone should listen to it. It's very dry. I know. You may have to have a drink. You may have to. I'm not like that. I'm not advocating grandma's fire water. I'm just saying. Anyway, let's get back to markets. That was a little deviation. These career economists piss me off. And you know that they know they're wrong. I don't know. Maybe they don't know they're wrong. Maybe they just think the world's wrong and my facts are correct. Like, you're like, what? Anyway, tweet your ADD. It's funny. You got to listen to it. You got to force yourself through it. Do it in 30-minute blocks. You got to do it. It's mandatory. All right. Doge, no one cares. Cardano, no one cares. Polkadot, no one cares. Matic, I still think Matic and Optimism are going to get a nice little run when the discussion moves from layer ones to layer twos. Right now, it's not even a layer one. The world doesn't even know what layer one means. They just know that Bitcoin is digital gold and Ethereum's the other one. That's all that retail understands. But those discussions are going to happen. You got to delay gratification. That's what we're going to talk about today. And that's why it's apropos. You have to have the ability to delay gratification to win. And part of that is when you have these theses, think of it like this. The way that you guys came to the crypto space and the way that you started learning and the things that started making sense to you, that in a slower, longer timeline will play out with Joe Sixpack. So if you went through this thought path, again, disregarding the things that didn't make sense or the things that were stupid when you look back and go, oh, it's dumb. They'll do that too. Meme coins, NFTs, whatever. I mean, the spammy ape NFTs. But you went through this path, a logical path, a progression. Other people will do that too. Retail will do that too. And as retail does that, you're selling your assets to them. But you got to have the ability to put your current list of desires on pause. Does that make sense? So, okay. Before we get into delayed gratification, we're trying this one. Yeah, it's kind of fun, kind of a little upbeat, a little beat to it. I think Matic has a future. There's some spammy assets in here, sure. But I still think we're in a bear market. My personal opinion. We're not in a bull market. How can we be if we're at 2.4 trillion total and Bitcoin makes up, more than half of that, and we were at 3 trillion. Bitcoin's not at all-time highs, Ethereum's not at all-time highs. There's not much. There's not much that's at all-time highs. I can't think of anything that's at an all-time high right now as I scroll through this list. And this is the best bad crap. So, by the way, there's going to be a Jupiter vote, the burn vote. I believe it goes live Thursday. So pay attention to that. Make sure you vote. If you own Jupiter and stake Jupiter, make sure you pay attention to that so you can get compensated for that. Woo woo. All right. Algorand, I don't think it has much of a future, but I think it probably melts up, I don't know, 30 to 50 cents ish. I'm not giving this as advice. This is more like, you're really throwing a dart here. The Algorand team has failed worse than any other layer one has failed. They really have crapped the bed. I mean, just epic failure. And it doesn't matter what GitHub submits. It doesn't matter how smart Silvio Macaulay is. None of that matters. They have absolutely floundered. They are just dumpster juice. Total failure there. They might be failing worse than Grayscale. It's hard to say. As you go down the list, I mean, you're going to have your own list. The great thing about these days that are red like this is great times to dollar cost average into your quality assets, which that's your decision. We're not going to discuss that on this kind of thing here because that's not what this is. But make sure you're thinking about the future, not the right now. Right now is just not all that important. Right now is not all important right now. All right. That being said, let's switch gears. Class is in session. We're going to talk delayed gratification.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
I'm banging through season 7 right now, Rick and Morty. Couple of slow episodes, but the season opener has Hugh Jackman in it. It's awesome. Anyway, just saying. Deadpool, Wolverine, also awesome. All right, so let's talk delayed gratification. This came up because I was talking to somebody about what's the best tool they could use, they could teach one of their kids right now. I said, well, probably delayed gratification, because that will set you up for success throughout the rest of your life. So we're going to explore this concept that is quite fundamental to achieving success, both financially in your financial life, and also in your investment life. So, well, I'll say this. In your financial life, there's kind of 3 lives. There's your financial life, non-investment. That's just like income, expenses, assets, liabilities, cash flow. Then there's your investment life, which is I'm speculating and investing in assets that I think are underpriced based on what I think might happen in the future. Then there's your life. Like, you can't have this lollipop yet. Go clean your room, and then you can have the lollipop. Then we'll go to the dentist because I give you lollipops because I'm a bad parent. Anyway, delayed gratification, and if you can master it, it can significantly shape your future because it leads to profound rewards in all of those areas, in life, in finance life, in investment life. So whether you're just exiting college or you're, well along your financial journey, understanding and implementing delayed gratification can make a big difference. So what is delayed gratification? Sounds simple, right? So delayed gratification is the ability to resist the temptation of an immediate reward in preference for a later reward. I'll give you $5 now or $100 tomorrow. Give me that $5. Oh, man. It's about making sacrifices now to reap greater benefits in the future. That's where you start thinking about the compound interest. The principle is applicable across just about every aspect of life: finance, personal life, personal development in sports, in your education. So anyway, many of you, anybody here heard, let me put on the comments on there. Get on here, comments. Have any of you guys heard of the marshmallow test? So there was a famous psychological study known as the marshmallow test, and Walter Mischel in the 1960s, he did this cool test. He's like, I will use some marshmallows and I will show all of you. In this experiment, children were given a choice. They could eat one marshmallow immediately or wait 15 minutes and receive 2 marshmallows. Okay? Years later, they did follow-up studies, and it showed that the children who waited for 2 marshmallows 15 minutes later had generally better life outcomes, including higher SAT scores, better social skills, lower stress levels, higher economic benefit. That's not really qualified. So I don't know if that means they got higher paying jobs or if they just had more money. 1 marshmallow, 2 marshmallows. So then we say, okay, well, what are some of the ways you could see this kind of play out? Well, in finance, delayed gratification is epitomized by the power of compounding interest. Albert Einstein reportedly, I don't know, I didn't hear him say this. I was there. I didn't hear him say this, but he said it. He must have said it behind my back. Albert Einstein reportedly called compound interest the 8th wonder of the world. I bet the people who were like the 7th wonder of the world, they're like, damn it, compound interest is way easier than this big waterfall. Anyway, by investing early and consistently and resisting the urge to withdraw funds prematurely, you allow your money to grow exponentially. This is investing versus trading, right? Consider Warren Buffett, who started investing at the age of 11. His ability to delay gratification and let his investments compound over decades has made him one of the wealthiest dudes on the planet human, right? Now, arguably, he doesn't buy much. It's like he made all this money. He doesn't do anything with it, but he does get McDonald's every now and then. The market's up. He's a weird one. I like his style. Anyway, some other examples from history. Benjamin Franklin, known for being frugal and both frugal and wise. Franklin invested in his education and skills, laying the foundation for his future success. His autobiography is filled with advice on the benefits of hard work and saving and delaying gratification. So there you go. Old Ben Franklin. Be frank. Steve Jobs. Jobs was known for his patience and long-term vision. He didn't just aim for quick profits, as we all know. Instead, he focused on creating revolutionary products that took a lot of years to develop. His perseverance and ability to delay gratification, you might say, have left a pretty lasting legacy, especially in the company at Apple. Look how long they take to make changes to their. Oh wait, sorry, that's just that they're not making changes to their iPhone. That's not delayed gratification. That's just lazy build. Anyway. J.K. Rowling. So before achieving the obvious success with Harry Potter, Rowling faced numerous rejections and financial struggles. Like, everybody kept saying no. They're like, nope, this is stupid. This is dumb. This is stupid. This is terrible. You're terrible. You're going to die poor and penniless. Both. However, she persevered. She continued to write and improve her manuscript. Her patience and dedication led her to be one of the most successful to author and pen one of the most successful book and film series of all time. And she's a billionaire, I think, if she hadn't squandered it. But she's a billionaire. So that's delayed gratification. Well, I don't know if it was her choice. So I'm not sure that's the best. I don't know about her investment acumen. If someone keeps telling you no, I don't know if that's delaying gratification or just people are just telling you no. But anyway, she waited a long time and she got rich. How do you implement delayed gratification strategies into your life? You got to set clear goals. You got to create a plan. You have to build good habits. You have to practice self-control, and you have to seek inspiration. So what does that look like? Set clear goals. Define what you want to achieve in the short term and in the long term. So actually set yourself up. And I want you to do it right now. Everybody in here, this is just an off the cuff one. I want you to say what you want in the next 6 months and what you want in the next 3 years. Give me a 6-month and a 3-year goal. 6 months and 3 years. Right now, do it. Set clear goals. It can be X and X. Okay, you got to create a plan. Develop a detailed plan to reach your goals. Just having a goal is not enough. Break it down into manageable, bite-sized steps, right? Set little milestones so you can track your progress. Listing, people that do lists, they do very well. Okay, build good habits. Establish habits that support your goals, whether it's saving a portion of your income, investing regularly, your physical fitness development so that you're stable mind and body. Dedicating time to personal development is important. Go to the gym, man, or at least do what Howard does and do 43 push-ups and then say that it's 85. You can be a Howard. Being consistent is the key. You don't have to be great. You got to be consistent, man. Show up every day. You know what they say the hardest exercise at the gym is? Pushing those front 2 doors open. That's right. Practice self-control. Learn to say no to immediate pleasures that might derail your long-term objectives. This means avoiding impulse purchases, prioritizing your time, sticking to a budget, right? You must practice self-control. I do it when I eat. If I have like stuff that's good for me, I eat all the stuff that's good for me first, because that's usually going to taste bad. And then I eat all the other stuff second, right? Eat the good stuff first. Or I will have shakes all day long, and then I'll have a meal at night instead of just having meals all the time, which these days would probably bankrupt me. Gosh. Anyway, you got to practice self-control, right? So create good patterns, create good habits. Seek inspiration. Look to role models that are not my scammy ass grandmother. Look to actual role models who exemplify delayed gratification. I mean, you might say monks. Yeah, true. But I think maybe we'll stick to like the Warren Buffetts of the world. But anyway, get yourself a role model who you think, or several who exemplify delayed gratification. Study their lives, emulate their strategies for success. Why should you refigure it out if they already figured it out? Just do what they did. Act as such. You want to be a billionaire? Start acting like a damn billionaire. All right. Okay. What are some of the benefits? You say, well, okay, great. So I'm building my habits and delayed gratification. I'm not going to no marshmallows right now. I'll wait 15 minutes for my 2 marshmallows. All right. Financial security, personal growth, better relationships, and achievement of long-term goals. So financial security. If you're saving and investing wisely, you build a substantial financial cushion. You build a moat, a cushion, a parachute, whatever you want to call it, that provides stability and opportunity. Let me tell you, life gets way better when you quit looking at the prices on the menu. Just that one little thing. It was like, I'm no longer looking at the prices on the menu. Man, I'll tell you this though. I went to McDonald's and they're not cheap anymore. McDonald's is like not cheap. It's expensive. I was like, what the crap? How is it $22 to get McDonald's? I don't understand this. It doesn't make any sense. I used to feed a damn family of 12. That's a lie. Anyway, by saving and investing wisely, you can build your parachute. All right. Delayed gratification fosters discipline, and it basically creates a disciplined mindset, a resilient mindset. And these are essential traits for personal and professional development. You got to be able to delay the now for the later, especially where compound interest. That's why, like when I buy stuff for people, I ask them, is this going to make your life better? It's going to make your life better? Yes or no? If you think it's going to make your life better, get it. If not, you're better off letting it compound. Every dollar you take now is $2 a few years from now, or even less. Patience and self-control can lead to more meaningful and lasting personal relationships. So because you're investing time in yourself and effort in nurturing, your mental and physical well-being, then you're going to have more time and with less effort to invest in those friendships and relationships. So not that I'm a good relationship coach. I still scream at the cats when they crap on the floor right in front of me, 4 feet from the litter box, right in front of me. They just stare at me and do it. Like, what are you doing? It's right there. You're just doing this to be a dick. But no. I've got to cultivate that relationship. I got to cultivate that relationship with Kitty and then nurture them to the litter box. Apparently, my girlfriend wants me to get a cat whisperer, but I think that's bullcrap. I don't think there are cat whisperers. There's no Caesar of cats. Anyway, that was a sidebar. Anyway, delayed gratification helps you achieve long-term goals. The ability to delay gratification enables you to achieve financially significant long-term goals that are often out of reach for most people because Joe Sixpack doesn't give a shit about the future. Joe Sixpack only cares about right now. Right now, this second, man. So it's not easy to master the art of delayed gratification. It's not easy. It's not super fun, but you will be like a samurai, like a financial samurai. It is immensely rewarding. So if you're making thoughtful decisions now and you're resisting the lure of the instant stuff, the instant gratification, get away from the whole trading thing. Get back to where am I going to be in 2 years, 3 years? It doesn't mean you have to wait that long, but that's the mindset. You start setting the stage for a more prosperous and fulfilling future. And the most successful people, okay, every now and then someone wins the damn lottery. But on the aggregate, the most successful people are those who have learned to wait and to work for what they want, understanding that the greatest rewards come to those who can delay their gratification. Okay? So if you can do this, you win. If you can't do this, it's pretty likely that you lose. Jesus, man, I have a whole toy store at my house, I assure you. Anyway, there we go. Take your time. Go slow. Stay in school. Don't do drugs. Don't do meth. Don't do anything that my poor, insolvent, drunk, grifter ass, strung out on meth grandmother wouldn't do. Very little. And I got to assume that Brandon's probably wearing a tank top today because I think it's hot as hell up there. So practice a little bit today, delayed gratification. First thing, set some goals. Set a few goals. Set a 6-month goal. Set a 3-year goal. This is your mission. Should you choose to accept it? I hope you will. All right, we'll see you tomorrow.
If you're an accredited investor and you want in on angel, seed round or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.